Hello, hello, we are live. Uh, I apologize, I'm late. I have some technical difficulties here, but I'm now here and we are live and we are going to talk about this huge market, this very exciting market, this Miami market in South Florida. I really like this. I really like this market. I really like Florida weather. Uh, I I am like a cold weather guy, but I also like the Miami weather. Uh, but what I like most in Miami is the exciting real estate, and that's what we are going to talk about in this episode. So let's get into it. Let me show you my CoStar software. For those who don't know about this software is the best in property intelligence. Uh, I think I am freeze. Let me fix that for the camera. Um, okay. Okay. Let me fix this because I really tried to use a new software called Restream, but I was not able to set up. So probably next time I will be using a new software because I don't like this OBS software. I don't know how to use it. Every time it freezes my webcam. So but I think if it's fixed now, I hopefully you can see me. Please let me know if you can hear me well. Okay, so I hope you are. Let me see. Here. Okay. So this for those who don't know this software, it is called CoStar. It's a property intelligence software I use every day to find deals. Also can see the last market information here. This is very professional company, and I like it because I always can get the last information here about the markets. So let's get into the market information about Miami. Let me show you this. You can see a summary of the market here, like the inventory market on Miami, which is 280 million square feet for industrial. We are only analyzing industrial here. For example, under construction, we can see it's 4.5 million square feet right now, and we can see the arrow pointing down. So that means it went down from the last year. So the absorption is the amount of real estate, or the size of real estate that went vacant versus the amount that went leased. So if you subtract the amount that were leased from the amount that were vacant, you get this number. So that means we are we have more tenants moving out from here uh, than tenants getting new space listed up. So so that's not necessarily a bad thing, maybe, but in this market it's not. I'm gonna show you why. Okay. So the vacancy rate is 6.5%. it is a little bit up from a year ago, which we was 5%, but all the national markets are experiencing an upside in the vacancy rate. So this is actually lower than the national average, that it's around, if I remember, maybe it's 9 or 10%, the national average. So that means we have a lower vacancy here from speaking on the national average. And also we have an asking market rent, which is 20, almost $21. That is almost double from here in Dallas. So that's a good market rent, and we can see the market rents is going up from the last year. We can see here the current is 20.81%, but a year ago it was $20 with 38 cents per square feet. So it is a change of around 2%. So that's a good thing, because that means we are probably some restrictions on the on the on the offer side. So that's something I'm gonna tell you about later. Uh, the market sale price, it's also a good price. That may mean $280, 278 may mean we are talking about mostly new buildings here, because all buildings are lower in price usually. And finally the market cap rate, this is an important one. We have almost 6%, a little bit down from a year ago, which was 5.9%, but that is not a big thing. Only 11 points from the last year. So that's a good cap rate, and so that confirms, or it's a strong point towards my hypothesis that we are talking about new buildings, because new buildings usually have a lower cap rate than old buildings. So let's see some of the big numbers, like the vacancy. So the market rent is going up. National it's $12. So we are above the national average. The vacancy rate, we are under the national average, which is 7.5%. Inventory, existing buildings here are going up. So for example, we see usually we can see here the usual vacancy rates in this market on a 10-year average, talking about 2015 and between 2015 and 2025. We see the lower in this time, the lower vacancy was around 3%, and the higher around 5%. We are a little bit over those numbers, but we still have a good number here. And the national absorption, it's negative this time, but it is something that all the national markets are experiencing, as I told you before. Okay. Market asking rent growth 2.1%. As you can see, for example, in 2020, in 2022, we experienced a rent growth of around 16%. That was huge. And in 2020, in the fourth quarter of 2023, after the pandemic, it was 11%. So that means this market is growing. And now I'm gonna tell you something. here, Miami, it's a let's say it's a logistic hotspot for Latin America. We have the Miami airport, and usually this airport it's the first airport, the largest airport in freight volume. So it is usually used as a hotspot for Latin American countries like Mexico, like Dominican Republic, like Colombia. So we can export many things from this airport, many small things like those companies like FedEx or UPS. For example, when people in Latin American countries like Mexico buy things from Chinese companies like I think there's a company called Temu, very popular in the US, in Mexico, and also AliExpress is very popular too. So there's many people that purchase cheap things here in these markets, and they order, uh, for example, one headphones over those websites, and these companies usually have a warehouse here in Miami, and they export those things by FedEx or UPS or this kind of logistics companies, and the client in Mexico receive those products in Mexico, and they uh, before 2024, for example, talking about Mexico, they didn't pay tax if that things they purchased from those Chinese companies were under $50. They didn't pay any tax. I think after 2024 they pay around 20% tax, but it's cheap because other products from China and Mexico pay like 50% tariffs, and these products they have this law that exempt products that are imported to the country that are under $50, and I guess many countries in Latin America, like Colombia, like I don't know, maybe like Brazil or other countries, can have the same rules for tariffs for those companies. So I guess Miami is a very good location for this kind of business that purchase products from Chinese companies and then export to Latin America. It's a very good location for those kind of business like drop shipping, like wholesaling, and those kind of business that wherever you have a platform, web platform where you purchase those products from Latin America and then importing inside your country. Miami it's a very good place to have your logistic hotspot. So that being said, uh, maybe that's why we are experiencing those good numbers here, like the low vacancies and the growing rents. For example, another thing in Miami, I will say, it's we don't have too many space to build new warehouses or new, yeah, for sure many warehouses and for sure other kind of properties, but we have those we have restrictions in the building codes because we have the wetlands, and those kind of places are not feasible to build new buildings, the wetlands, you know. So that makes Miami to have a restriction in the supply. So that's a good thing because we have the demand from the Latin American countries purchasing these things from China, and we have the restrictions in the land because of the wetlands. Okay, so so that being said, the strategy I would so another thing we can see in this report, it's these people that are moving, that are leaving those buildings, usually are old buildings, old industrial buildings. These are not new buildings. Uh, these are old industrial buildings. Why? Why I think they are leaving the old industrial livings and then moving to a new industrial buildings built after 2020, I think. Uh, it's because of the weather, I think. Because Miami, as you may know, it's a very hot weather. So in warehouses, if you are inside a warehouse working, uh, you know that warehouse may the best thing you have to do is have some kind of cooling, or uh, some kind of cooling, or some kind of thing, so you don't experience that hot weather. So that's where I think they are moving from the old buildings to the new buildings. So if we are investing in this market, uh, we can do some. That being said, the strategy I visualize, it's we can buy these old warehouses that are not well insulated, and we may put some insulation. We put some maybe some doors, some extra things, uh, but for sure the best thing we can put is insulation, so we can invest in those old warehouses and then have a value added strategy and put some insulation, put some doors maybe, or high decks, and we get new tenants. Okay, so I think the opportunity here in Miami, it's on those old buildings, not the new buildings. So we may draw here value add strategy. Okay, so we can see more graphics here. Availability rate, availability growing, and then dropping from this year 2025. Square foot, sublet share, vacancy, monsoon market, 6 months. Yeah, it looks like it's a good market. Maybe not growing a lot, but maybe stable market. But we can take advantage of that strategy if we purchase uh, some old buildings, some old warehouse. Now, other thing we have to look for, it's the clearance, because we are looking for some kind of logistic building. Uh, we need high clearance. The other thing is the insulation, and maybe if we are looking for logistics, and we are looking for those kind of business like those that export with the with the help of the airport, we may look for something close to the airport. That's another thing, and we may look for something that has high deck dogs. Okay, so we can fill the trucks and go to the airport. Because this is not a local market, this is a exporting market. Okay, so that being said, let's go to find the opportunities here. We have We have now the strategy visualized. So let's find the properties in this CoStar software. Okay, so we click here on the sales tab, and then we can look for sale properties here. As I mentioned, these CoStar, they have their own people that call building owners, and also they are getting data from other websites on the internet. So this is I've tested several softwares like this, and I think this is the best with the most complete information, because they do a really good work calling people and getting the information about the leases, about which properties are for sale or for lease, and what are the market information. So let me find properties in Miami. We have access here of all around the properties all around the country, all around the US. Also in Canada, we can find some properties in Canada, and I think in the UK we have some properties. So I can invest in any property all over the US. So let's find properties for sale, but remember, we are on industrial. We will select flex buildings too, but as I mentioned in past shows, in past episodes, the flex buildings are more like for local businesses, for service businesses, because they are more prone to office kind of businesses, or more prone for those businesses that needs some part of office and some part of warehouse, but warehouse for the local markets. So they are like last mile distribution, or maybe these service businesses that are like construction businesses, roofing businesses, business cleaning services, those kind of businesses. But here in this strategy, we are looking for something to export to Latin America, to like fulfilling businesses, like logistic businesses. So we are looking for high clearance and flex buildings. One of the cons they have is they don't have the uh, high clearance. They probably are let's say 12, maybe 15 clearance, 15 feet, but we are looking something more like in the range of 30. So this time we are only selecting industrial. Okay, but the other thing the other thing we are looking for, it's old buildings. Remember, tenants are in this market, tenants are moving from old buildings to new buildings. So old buildings have a high vacancy rate, or higher than new buildings, and we are taking advantage of those owners experiencing those tenants living, and we are lowballing those owners of these old buildings to make a value added strategy to make some fixer uppers. Okay, so let's let's say we are looking for something built up to, let's say, 1970s. Okay, 1970s. 1970s. Okay, that's 55 years ago. That building, maybe it's old, maybe deteriorated. Okay, okay, remember, we want to be close to the Miami airport, and we are looking for something This time we are looking for something over 100K, because we are looking to rent it out for a fulfillment company, um, or wholesaling company, and they need a lot of space. So building property size, let's say over 50K. Okay, we left with only 8 properties in the area close to the Miami airport. Now let me tell you something. According to the data on the market report, where we are seeing most of the new buildings, of the new industrial buildings, is in this area. Okay, so we may get something around here. We will be well, another thing is important. You have to choose something that is close to the highways, or the major roadways. But here we are very close to the airport, so I think all these buildings are good. So let's see, for example, this building. Okay, so it is a owner user. This one is a owner user for sale, $17 million. It's a class B class B or maybe class C building. Because of the stars, we can see a class E building. It's a new buildings most of the times. Class B buildings, it's like a old building, but in a good location, or with a medium or big tenant. And a class C building, it's a deteriorated building. So this will be between the B and the C class. So I think this is a good one. Let's see this one. 58 square feet. Price not disclosed. Some of the building, most of the buildings, they don't disclose the price, because they don't want to compete with the other buildings. They want you to call and ask the price. But for this exercise, we are only looking for the buildings that shows the price. Okay, so this one is 23 million. Okay, so now you will say 23 million is a lot of money. And yeah, it is a lot of money. But you know, you can do a lot of things to purchase these buildings. You can get financing from many banks, or many lenders. Many private lenders actually lend for these kind of buildings. It's the same thing as in the houses. They don't lend you all the money. They lend you around maybe 70-60%, depending on the rate, on the federal rates, or the rates the banks are asking for. And they also have other parameters, like the DSCR, that is debt service coverage ratio. So in summary, that is how much you will be paying, and how much you are getting from the rent, minus the rent less the expenses. Okay, so you can get the money from the bank, but for the down payment, that from that extra 20-30%, you may get seller financing from the owner, or you may get other investors in a syndications, like we do. We usually do syndications like this, where we join several investors, And you may join for this. If we purchase this building, for example, the investment ticket may be like 25K, maybe 50K, depending on how many investors we are joining. And that way you can join other investors and purchase all the property with us. So there's many ways you can do this, and you can get into this kind of I would say maybe complicated strategies, because definitely it's not for all. Purchasing a building, fix it up, uh, and then rent it out, and then sell it. It's not for all. It's not like making a house flipping. It's more complicated. So syndication is, I think, it's the best thing to do. Okay, so we have also this property 1959. It is for sale for 37.5 million. Okay, and it's 143. So let's include these three properties. Okay, this one, and this one. So now we have three options. I'm gonna let you vote on the chat which one you want me to analyze. We have this first option. Let's go. This one is for 17 million. It's asking 17 million. It's a 50,000 square feet warehouse built 1952. So we have this one, 70 million, option A. Then we have this second option. It's 110K, 110,000 square feet. They are asking 23 million. And then we have this one. It's 37 million, and they are asking 140. Excuse me. They are asking 37 million, 37.5 million, and it's 143,000 square feet. So which one do you want me to analyze? The option A, 17 million. Option B, 23 million. Option C, 37 million. Which one? The cheapest or the most expensive? Which one? Let's I'm gonna give you one minute, and then we are gonna choose the property to analyze. Okay? So tell me which one do you want me to analyze. Okay. Yeah, I think it's a big opportunity, this market. I actually think logistics markets I think it's a good business. And we may experience in the next coming years a growth in the logistics. Many people thinks logistics are this administration it's doing bad things for the logistics, but I really think we are going to see the results maybe 2 years from now, and we may see an explosion in logistics. Many companies coming to the US from other countries, because many people think we are not many people think, let me many people think we are not if we put tariffs into the imported products in the US, it's a bad thing. Many people think that thing, but maybe a good thing. I would not say it's a bad or a good thing, but maybe that many companies are coming to the US and reducing the extra labor costs with AI, which is something I think they may do. For example, these big automotive manufacturings plants that are in Mexico or in maybe in Europe or other countries. Uh, yes, of course, in Mexico they have a cheap labor, but we can reduce those costs in with AI, uh, because for example, Tesla, they have many robots, and they don't need as many labor as other plants in Mexico, for example, because they can do it with robots, and also the government here it's offering tax benefits, so they will save also in taxes. So I will not say it's good, bad, or bad things, but we may see the results in maybe 2 years, I think. So, okay. So people decide for the 775 Northwest 70th Street. So this is this one, okay? So let's analyze this. I to be honest, I don't know if this property is still on the market because we have the information from almost 3 years ago. Sometimes CoStar has outdated data, but who knows? Maybe still on the market. Maybe it's a good deal. And let me tell you something. If if you see a property that is on the market for a long ago, you can lowball them, okay? Or you can lowball, or you can uh, propose some creative financing, like seller financing or something like this. So you always want to research how long the property's been on the market. Okay. Okay, let's see the property. I always want to see the pictures of the property. This is a good one. I really like ugly properties. Yeah, and most for warehouses. Oh, we see this property has been renovated. Maybe okay, maybe it was recently renovated. For example, you can see here the roof. You can these tenants may be experiencing some heat here. If you put some extra insulation here, you may increase the rents for sure. Or another thing you can do is, well, in this case, we are looking for logistics properties that want to export through the airport. But another thing we may do in Miami is make a cold storage, because I read that cold storage are a good thing to invest there. But this is more like for the local market. Okay, looks like it's an old building. Let's read what it says about Uh, the price per square feet, I think it's a little bit high. Maybe that's why they have been long in into the market. And another thing is an owner user. When you see an owner user property, you may know the two things, especially if they are small business owners. They usually price the property very high because one, they don't have any need to most of those, they don't have any need to sell the building, and they also think because they never charge for a rent, because they use the building for their operations, they don't know anything about the worth of the building, you know. So it's like selling a home. When you like your home, you may sell it for maybe double the price on the market. But the thing is, if you if you like your home, it doesn't mean the market likes your home, you know. So one thing I've seen with owner users is they price very high because they don't know uh, how profitable is that building, you know. So, but the other thing is you price high, you will be long time on the market. So they may receive a lowball offer. So we can see here that CoStar just confirmed or updated the data on November 10. That was like less than 2 weeks ago. So that will mean this property is still on the market and the information is correct. Okay, but as we see, for that price, it's too expensive. At least uh, if they have a huge lot, like you can expand the warehouse or maybe you can build another thing, you can justify that high price. But if you are like a standard building, like a standard AFR, uh, that price may not be justified. So they have an AFR here of 0.64, so that may be a standard AFR. So I think this price, it's too expensive. Okay, cost of rent estimate. This is an estimation for the market. Okay, so CoStar estimates that we can get $15 to $18 per square feet. Taxes. Okay, located. The good thing about this is let's see how many doors and high decks they have. Okay, market conditions. Okay, parking radio. They have three docks and three drive-ins. So let me do a quick calculations of the value of this property uh, according to the rents that CoStar uh, the average rents. So, for example, if we let's say we have an $18 per square feet, we multiply by 50 51 5404, and that's the annual income we have. So that will be around $900,000. Because this is an old building, we will have a lot of expenses. So I'm gonna multiply by 60 let's say 55%. So that means we have 45% of that income, we have it in on expenses, because this is an old building. So uh, pocket in money will be $500,000 a year. Okay, and we divide it by a cap rate. So we see the cap rate, the average cap rate here in this market is 6%. So let's say we have we if the average, but we see a lot of new properties here. So let's say the average, the cap rate for this property might be 8%. This is a gross calculation because I have to know the real cap rate we are paying for this property. We have to go inside the property and make the due diligence, and also make a due diligence on the rentals, because we don't know how much rentals they are making. We only go for the rentals here, the estimated rentals in CoStar, but this is a gross calculation. um, so we have 500,000 and we divide by a 8% cap rate. Okay, so we have a value of 6.2 million, and they are asking 17 million. This is too much, too much. If we pay with a cap rate of 7%, we may pay 7 million, but 17 millions is more than 2 times the value. So this property is overpriced. I will not, even if we can do financing here. Let me tell you what we can do. Okay, we pay let's say we pay a 6% 6% cap rate here, which may be for a for a for a newer property, not for this property. But if we pay a 6% cap rate here, we will be paying 8.3 million dollars for this property. So we are not paying 17, but we are paying 8.3 million. We may negotiate with the owner and we say, okay, your property is I will pay you 8.3 million, which is overpriced, it's still overpriced, but I will pay you with, but you make me sell the financing. So I may pay you 500,000 now, and then I will pay you over a maybe 3 year period. I will pay you only interest only, and on the third year I refinance it and I will pay you the capital, the 7.8 million for the rest of the loan. So that's what you can do here, but you cannot pay 17 million. It's hugely overpriced. Okay, if that, as I told you before, I paid more for properties that has a huge remaining lot area for expansion, but in this case they don't have that. They have 1.8 acres and they have a factor area ratio of 0.74, so you cannot build anymore. Okay, this is very overpriced, and that's what I will do. I will say I will pay you more, 8 maybe 9 million, but I will pay you all over 3 years with a low interest, because you are paying the overpricing, you are paying on the upfront, you are distributing all over like they are interest. You know what I mean? Okay, so if the property value is 7 million and you are paying 8 million, that means you are paying 1 million interest. So you should negotiate that overprice, but you should negotiate to lower the interest, because that interest is already included in that 8 million you are in that 1 extra million you are overpaying. And then you add some, as I mentioned, you can add some insulation, or you can add some, maybe the dogs are good. Maybe instead of ramps, uh, you build 2 more dogs instead of those ramps. Uh, but I will not do many things to that building. Just the insulation, maybe some paint here and there, and the decks, and then rent it out. And then after maybe 5 years, I will sell it. I will sell it because it says the market, the rents are growing, and the market is probably in 5 years you can get an extra $2 million for that property. So that may be a good deal. So in summary, when you find an overpriced property, and if it's listed for a while, for 1 year or maybe 2 years, like this property, you can offer the seller financing. That's what you can do, and those are the properties the owners more prone to accept those creative financing strategies. Okay, so I hope you like this video. Uh, Please, if you like it, subscribe. I have a YouTube channel. I am in the Nearshoring. I'm the Nearshoring team. You can find me on YouTube, and you can also find me on LinkedIn if you want to connect directly with me. You find me in LinkedIn as Andres Pite, and you can follow me, or you can send a connection request. And please, if you have a comment, maybe you don't share my strategy or the things I just said, you can comment. I reply all the comments. And also, as I mentioned before, if you want to invest in properties like this, in business like this, I always do syndications with many investors, so they can invest from $25,000. So you can join my investor waiting list. On the description you will find the link, and I will send you a link. I will send you an email when I find a deal like this, so you can jump over into the ship, and we can purchase these deals together. Okay, so thank you. Hope you like this video. Like, comment, subscribe, and see you on the next. Bye.